What do Netflix, Goldman Sachs, TSMC, ASML, and Burberry all have in common this week? They're about to drop market-moving updates that could shake up the stock market. If you're an investor, trader, or just curious where the money's heading next, this is the video you can't afford to skip. Earnings season is officially here, and this week, some of the biggest names across tech, finance, semiconductors, and luxury fashion are set to report. From Goldman Sachs' bullish outlook on the S&P 500 to Netflix flirting with all-time highs, from TSMC riding the AI boom to ASML navigating trade tensions, and Burberry's bold comeback plan, we're breaking down exactly what's happening, why it matters, and what you need to watch out for. Hi, I'm Sam from Finance Spot. Let's get into it. Goldman Sachs is set to report its second quarter earnings this Wednesday, July 16th. The investment banking giant enters earnings season with strong momentum. Earlier this week, Goldman became the latest Wall Street firm to raise its year-end target for the S&P 500, now forecasting 6,600 points, up from 6,100. The index closed at 6,280.46 on Thursday, and is already up nearly 7% for the year. Analysts at Goldman point to several key drivers for further market upside: a resilient 2026 earnings outlook, upcoming Fed rate cuts, and neutral investor positioning, all suggesting room for continued growth. Goldman isn't alone. Bank of America also lifted its S&P target this week, joining a broader bullish shift from Barclays, Citigroup, and Deutsche Bank in recent weeks. In the first quarter, Goldman capitalized on market volatility. Revenue from equities trading jumped 27% year-on-year to $4.19 billion, as investors navigated tariff-related uncertainty. Total revenue climbed 6% to $15.06 billion, beating expectations, and earnings per share came in at $14.12, well above the $11.58 recorded in Q1 of 2024. Since the announcement of President Trump's Liberation Day tariffs, Goldman shares initially dipped, but have since rebounded sharply, gaining nearly 24% year-to-date and hitting a new high this past Monday. Although Goldman didn't issue forward guidance in April, CEO David Solomon noted the firm was entering Q2 with a very different and more favorable operating environment. Goldman Sachs will report alongside Bank of America and Morgan Stanley this Wednesday. Meanwhile, JP Morgan Chase, Citigroup, Wells Fargo, BlackRock, and BNY Mellon are all set to release their earnings the day before. Netflix is gearing up to release its second quarter earnings this Thursday, July 17th, and expectations are running high. The quarter featured major releases, like the final season of Squid Game and a brand new chapter of Black Mirror, following on from earlier hits like Adolescence and Back in Action, starring Cameron Diaz. These headline titles have helped keep Netflix subscribers engaged and the platform buzzing. In the first quarter, Netflix brought in $10.54 billion in revenue, up 12.5% year-over-year, and slightly ahead of analyst estimates. Earnings per share also beat expectations, coming in at $6.61 versus the forecasted $5.68. Looking ahead to Q2, Netflix has issued a revenue guidance of $11.04 billion and an earnings per share target of $7.03, both above Wall Street predictions. For the full year, the company expects revenue between $43.5 and $44.5 billion, with healthy operating margins around 29%. Industry analysts remain bullish. Matt Britzman of Hargreaves Lansdown says Netflix has proven to be both recession and tariff resilient, two key traits investors are watching closely right now. Combine that with strong execution and solid fundamentals, and it's no surprise the stock has hit multiple all-time highs. In fact, since reporting Q1 results, Netflix shares have surged, ending June at a record high. The stock is now up nearly 41% year-to-date. While Netflix no longer discloses subscriber counts, investors will be keeping a close eye on operating margins, especially with 33% being floated as the target. That figure could be key to pushing full-year expectations even higher. Though a slight dip is expected in the second half of the year, as content spending ramps up, the coming earnings could provide another boost if margins remain strong. TSMC, the world's largest contract chipmaker, is set to report its second quarter earnings this Thursday, July 17th. And there's already strong momentum heading into the results. The company just released its first half revenue numbers, giving investors an early look at performance. From April to June, TSMC posted revenue of 933.8 billion Taiwan dollars, roughly $23.6 billion. That's up nearly 39% compared to the same period last year, and it beat analyst expectations from LSEG. June alone brought in around 263.7 billion Taiwan dollars, down month on month but still up nearly 27% compared to June of last year. Altogether, revenue from January through June totaled 1.77 trillion Taiwan dollars, marking a 40% increase over the first half of 2024. Despite ongoing currency challenges and growing tariff uncertainty, analysts say TSMC's performance remains strong. Dan Coatsworth from AJ Bell pointed out that the company continues to benefit from booming demand in artificial intelligence, an area where companies are spending aggressively to stay competitive. And that demand directly supports businesses like TSMC, which build the infrastructure powering AI development. Tariffs remain a looming concern. President Trump recently announced plans to impose new duties on chips, but TSMC appears prepared. Earlier this year, the company committed another $100 billion to expand U.S. manufacturing, adding to the $65 billion already being invested in Arizona. At TSMC's shareholder meeting last month, CEO C.C. Wei noted that while tariffs don't directly target exporters like TSMC, they can still lead to price hikes and weaker demand in some areas. But he emphasized that AI-related demand remains incredibly strong and continues to outpace supply. Despite all this progress, broader market volatility and tariff fears have weighed on the stock. TSMC shares are up just 2.3% year-to-date on the Taipei Exchange. All eyes now turn to Thursday's earnings call, as investors look for confirmation that TSMC's AI tailwinds can overcome the macroeconomic noise.
ASML is set to report its second quarter earnings this Wednesday, July 16th, and investors will be watching closely. The chip manufacturing equipment giant has had a shaky year so far. After releasing its Q1 results back in April, shares slipped and have since hovered near the flat line for 2024. One of the main concerns? Net bookings came in at 3.94 billion euros, well below analyst expectations of 4.82 billion euros. Still, ASML's Q1 net sales landed within guidance at 7.7 billion euros, and earnings per share hit 6 euros, nearly double what the company posted in the same quarter last year. Despite the solid profit figure, CEO Christophe Fouquet sounded a cautious tone. He pointed to recent tariff announcements as a growing source of uncertainty and warned that the macro environment is likely to stay dynamic for some time. Artificial intelligence remains the industry's main growth engine, and ASML is right at the heart of that. Its lithography machines are essential for producing the world's most advanced semiconductors. But according to Fouquet, the AI boom is shifting market dynamics in a way that could create both opportunities and risks. So, to recap, Goldman Sachs is doubling down on market optimism, Netflix continues to ride high with strong fundamentals and record-breaking content, TSMC proves once again that AI demand is showing no signs of slowing, ASML stays steady despite tariff headwinds and shifting market dynamics. These aren't just updates, they're signals. Signals of where markets are headed, where investor confidence lies, and where opportunities or risks could emerge next. What do you think? Which of these companies are you most bullish or bearish on this quarter? Let us know in the comments. And if you found this video helpful, hit that like button, subscribe for more market breakdowns, and turn on notifications so you never miss an update. Thanks for watching, and we'll see you in the next one.